Well, welcome everybody. Thanks for taking time out of your day to join us as we discuss some of the things that are going on with the mortgage roller coaster and how you can better communicate with your clients. I'm super excited for a couple of reasons because I've got just a mortgage expert who's been doing this now, and I won't steal his thunder. I'll let him give a little bit of a background and beat his chest on who he is and what he's done. But we've got Laurence Heisler, who has been is out of Central Florida, been doing mortgages forever. And the other reason I'm excited is Laurence and I have actually known each other since kindergarten, and just lifelong friends. And so it's always really fun to see your life collide and come back together and get to talk about things that are relevant to our shared customers, which is real estate agents and real estate brokerages, and really be able to talk to somebody that you've known for a long time that's at the top of their game. So Laurence, thanks so much, man, for taking time out of your day to talk with us. How's life in the mortgage world in Central Florida?
It's good, Frank. I'll tell you, man, we are cooking right now. It's really picked up nicely, and I'm excited to be here today. I'm excited to help everybody out and just give them a little tip here and there on how to make our businesses boom.
Yeah. So Laurence, take a moment. I know this is the uncomfortable part. Everybody hates doing it, but tell the audience a little bit about yourself, what you've done, your company, all of that stuff, and give a little background so that they understand a little bit about these two talking heads and why it might be worth a few minutes of their time to listen to us.
Yeah, absolutely. I'd be happy to. So I've been in the mortgage business. This is my 25th year in the mortgage business. So right there, about half my life I've been doing mortgages. And it started off as kind of just one of those things that I was never expecting. I don't think anybody in the mortgage business ever is growing up thinking one day they're going to be in the mortgage business.
Right.
But I'll tell you what, I'm sure glad I did. I'm sure glad I got the opportunity. It was actually, as you know, Frank, a mutual friend of ours, Chuck Small, that passed away a few years ago, that got my foot in the door, and I'm forever grateful for that. Owned my own mortgage company for about 14 years. Worked right through the mortgage, the real estate crash back in 08, and then kind of regrouped a little bit, went in a couple different directions, and now I'm a branch manager in Winter Park, Florida, for the mortgage firm. The mortgage firm has offices in probably about 6 or 8 states now. One of the fastest growing smaller mortgage companies in the country. So I'm blessed to be with this company. They're very fast moving as far as being able to make changes quickly, but yet big enough to where we can enjoy what the big companies enjoy from a rate and a scale perspective. So I manage a branch now. I've got a team of 5 people that work for me, and we're closing about 20 to 25 loans a month right now.
That's awesome, and we're gonna dive into a lot of content here. Now, for those of you that are tuning in, if you didn't catch us the first time we did this, I mean, it was just overwhelming, the amount of information that you were able to share with us, Laurence. It was really awesome. I mean, obviously, and I'll give my quick background too. I've been in this industry now almost 25 years and worked with all of the major big box franchise brands in one capacity or another as a consultant or on staff, and worked at one of the big portals as well. But the primary focus of my career in this industry has been working with brokerages and top producing teams and agents, whether it's from a coaching perspective or just helping them with technology tools. And I'll tell you, the first time we did this was the reason we're doing it again today, is the response we received was just overwhelming with regard to agents that were really pulling some good nuggets. You shared some incredible information. So we're going to kind of do a little bit of a repeat on that, but we're also going to kind of take it to the next level. And I don't know if we can pull up the next slide, but I just want to give everybody a little overview of what we're going to cover. The purpose of this is just to provide education. We're not selling you anything. We just want to help talk with real estate agents, and we want this to be interactive. So if you have questions, in the control panel on the right-hand side, there is a questions pull down menu there, and you can type in a question, and we'll try to get to as many of them as we can, right in line. The other thing is we're gonna have a couple of polls. We're gonna ask some questions and give you guys some poll questions that you can answer. But we want to talk about current state of interest rates, and what the projections are and the expectations. So Laurence, let's start with that. Right out of the gate, just tell us. I mean, we're still hearing, interest rates have never been lower. We know that that's maybe real but not real, or real but there should be some asterisks attached to it. give us, from your perspective, your chair, where the heck are we right now with regard to the state of interest rates, and what are you projecting moving forward?
All right, great. Yeah, great question. So I would say it's real with a few little asterisks by it. So I'll explain that. I did some pricing this morning on just some basic products. Today on a 30-year fixed conventional with good credit, you're looking at about 3.25, maybe as low as 3.125. And that's with no points. I'm going to quote you all rates without any points. So we're looking at a level playing field here. 15-year fixed, 2.875. We looked at the government loans, FHA today with good credit, you're looking at 3% with no points.
Okay.
VA and USDA are going to be right around 3.25, right in that ballpark. So as far as where the rates are at, they are at historic lows. We've never been lower than we are right now, like today.
Okay.
So how long is it going to last for? Well, that's the question of the year. And I can tell you, the things that we have working for us this year is the fact that it's an election year. Okay. The other thing that we have working for us is you got to understand our business being the mortgage business and the bond market thrives off of bad news. So anytime we see dips in rates, it usually is corresponding to something bad that's happening in the economy, in the world in general. And of course, we've got, coronavirus, and that has really put so much fear and uncertainty in not only people, but the market itself, that it's helped keep the interest rates really, really low. So
Right.
as long as we have this type of things going on and really through, I would say, the election, I think we're going to see the rates stay right around these all-time lows. Now, the only products that we're not seeing great rates on are the lower credit score type clients.
Right.
They're still getting hit pretty hard. And when I say lower, probably below 640, definitely below 620.
Right.
It's really hard to get a loan today if you're below 620 credit. And I know we're going to get a little bit more into that, but that's basically where rates are today.
Okay. So when you think about the market, and obviously you're in Central Florida, but you've got colleagues around the country. And we deal with it at Elevate and Elm Street. We're dealing with realtors and brokers all over, in all 50 states. How's your market right now? Because obviously you're over in Central Florida, I'm in Clearwater Beach. To me, Florida's screaming right now. Properties are just flying. There's pent up demand. What are you seeing as far as the market? What are you hearing, across the country as far as the real estate market?
Yeah, it's crazy right now. And from a mortgage perspective, you got to understand we've got the double whammy going on right now. We've got a ton of refinances. Pretty much anybody that bought a house prior to last year is in a good position to look at a refinance. So we're getting, a ton of those coming in. But the purchases in the last 2 weeks have gone absolutely crazy. Just to put it into an example, I have a client right now that's pre-approved. They're in that 235 to 250 range, and they've made 3 offers in the last week, and all 3 of them they've come in either at asking price or above asking price, and they've been outbid on all 3 offers. So it's definitely a seller's market right now. There's a lot of buyers coming out, and they're all coming out at the same time, and the inventory isn't as big as it was at one time. So there's never been a better time to position your buyers in a great position than right now. So yeah, it's hot over here.
Yeah. So Laurence, we're going to talk about that. We're going to get into some granular details on how real estate agents can better prepare their customers in these hot markets. But let me go ahead and jump to the first poll question. Let's throw up the first poll question there is, how is real estate, in your market right now? Is it still shut down? No one's moving, people are looking, what's the market like right now? We've got agents attending this webinar from all over the country, and a really good audience, really good turnout today. Really appreciate folks taking their time to do that. And but I want to do that. And then Laurence, you and I were chatting just the other day. And one of the things that we talked about was, what can real estate agents do to better prepare their customer to present better offers. And I mean, there was a couple of things that you brought up that were sort of like maybe real estate agents don't understand that they're viewed as contingencies and they may not be thought of as contingencies. So in your estimation, using your customer as the example here that just lost 3 deals, what can real estate agents be doing right now to prepare, their clients to put forth really good, powerful offers?
Yeah, well, I think it's really important today to make sure that you're limiting the amount of contingencies that you're putting into any offer. And of course, the most popular contingencies are going to be the seller paying closing costs, possibly another property that they need to sell. A big one is down payment assistance. So, a lot of realtors that I work with think that they're doing their clients a big justice by pushing down payment assistance. But the reality of it is, Frank, that it's a contingency. And, it has to be disclosed that down payment assistance is being used on the transaction. And sellers and sellers agents know that that's adding risk to the transaction. It's potentially going to prolong how long the transaction's going to take. And down payment assistance has their own underwriting that differs from our underwriting. So I think a lot of agents don't really know that about down payment assistance. There's a lot of moving parts to it. Not only is it more of a risk for the client, but they end up in most cases with a higher interest rate than they would be able to get if they were able to just get their own down payment or maybe have a gift from a relative or some other source to bridge that gap. So we're looking for ways now to minimize the use of down payment assistance and looking for ways to try to get clients into houses with as little contingencies as possible. And that's really one of the big keys in getting their offers accepted.
Yeah, that's great. And you know what? I've got, I should have mentioned earlier, we got folks helping us with this webinar in the background. I've got Aaron, who's just awesome, part of our Elm Street team. And it's hitting me with, we've got a question here regarding refinancing. So Aaron, instead of waiting until the end, because I know last time we did this, we had all these questions at the end and we couldn't answer them all. So I want to let everybody know, if we do not answer your question live and during the webinar, we're going to actually get back to you on it afterwards. But Aaron, do you want to go ahead and hit us with the questions that you're starting to get, or the refinance question?
I do, thank you. And also thank you to Desiree for sending this in. Desiree is asking, how long do you have to own your home before you can refinance?
All right, that's a great question. You can refi. The rule of thumb is 6 months, and I'll tell you why. A lot of people don't know that mortgage lenders all have an agreement with our investors. So when we close a loan, it gets sold off or it gets serviced by an investor, and that investor has an agreement with every mortgage lender that does loans out there. And the agreement is that the client's going to make at least 6 mortgage payments, or else we have to pay back our commissions that we earned on the transaction. So it's not a prepayment penalty. It's nothing that affects the client. You could honestly refinance a month after you're in a house, but mortgage professionals, out of courtesy for each other, we look for that 6 months or 6 payments before you're able to do something on that transaction. And usually, I mean, I can tell you, if you purchased a house in the last 6 months, you probably have been pretty close to where the rates are today. So I don't know that it would really benefit you much to do a refinance if you purchased in the last 6 months anyhow. So that's what I would say, is wait 6 months and then take a look at it from there.
Yeah, that's really interesting. I didn't know that. I knew there were some, in industry-wide professional courtesy, so to speak. But I didn't realize that technically you could in 1 month. But I mean, what kind of bad loan did you get into 6 months ago if you're needing to refinance already? Rates have been low for a year or two,
Well, the reality of it is, Frank, people are getting excited. Everybody's excited right now, and this is a good excitement. Like, I want realtors to talk to their old past clients about refinancing, not only because it helps drive some business in, but it also makes them aware of where the rates are. And a lot of times what ends up happening is they're having a discussion about possibly refinancing, and they're saying, well, hey, you know what? Maybe now's the time for us to sell our house and buy a new house. So a lot of my agents are really leveraging these low rates to help drive that enthusiasm, and they're ending up getting buyers and sellers because of it.
I have a really close friend, Laurence, to your point, that was looking at refinancing his home. And when he started really digging into it and looking at some of the equity in his home and what he could refinance to, he also realized that he never in a million years ever thought he could buy an investment property. But as a result of digging in and looking at what kind of equity was in his home, what the refi opportunities was, he actually refinanced his home, pulled a home equity loan, and used that to fund a second property as an investment property. And that all started just from having a conversation about potentially refinancing.
Yeah, I mean, we've got kind of the perfect storm working right now, and we really don't know how long it's going to last. When the election happens, regardless of who gets elected, all bets are off at that point. And I can tell you that all the analysts are saying that the interest rates will go up. It's inevitable. They've never been this low in 60 years. So it's inevitable that rates will climb. It's probably going to happen next year, is what I'm hearing. So we've got about a 6 to 8 month window for anybody who has been looking to buy, or anybody who's been looking to utilize their equity to either buy other properties or get rid of mortgage insurance or do any of the cool things you can do when you've got great property values coupled with historic low interest rates. So if there was ever a time, this next 6 months, the time to do it.
Yeah, and Laurence, one of the questions that I wanted to throw out, and I'll ask you as well based on what you're hearing, but I wanted to ask our audience, and we can throw up another poll questions. Are you currently receiving an increased amount of questions from customers regarding financing? And with that, Laurence, what is it like from your perspective? I mean, you don't necessarily deal with the direct consumers that often, I don't think. I think you're probably dealing with a lot of real estate agents, but what kind of questions are you getting right now regarding financing?
Yeah, I mean, and I do actually, Frank, I deal with the customers as much as the real estate agents. A lot of it is geared around what makes sense for them to do. So every day I get mortgage statements in from clients, and that's always where I start off. If I'm looking at doing a refinance for somebody, the first thing I have them do is send me a copy of their current mortgage statement, because that's going to tell me a lot about their situation. It's going to tell me what their interest rate is, what their monthly payment is, what their escrows are, how long they've been on that loan for, and then we can have a discussion about what their goals are. A lot of times people just hear that rates are low and they get excited and they say, hey, I want to refinance. And when I ask them what their goals are, they really don't know. It might be to lower their monthly payment. In a lot of cases, it turns out that it makes more sense for them to maybe lower their term. So if you can go from a 30-year down to a 15-year, that saves you so much in the long run in interest. It's mind-boggling how much these customers are saving right now. So it becomes more of a math problem, and that's what I love to do. I love to sit down and look and see where they're at right now, and I'm always going to put myself in their shoes and let them know, yes, this makes sense and here's why, or no, you know what, it doesn't make sense to refinance, stay where you're at.
Well, and that brings up a great question that we just got asked, and Lisa W asked us, and this is great, I hear this a lot. So Laurence, the question is it good to refinance in order to remove PMI?
100% yes. Yeah, and I'll tell you why. PMI doesn't do you any good as a consumer. PMI, private mortgage insurance, protects the lender in the event that you go into default or go into foreclosure. So there's no protection for you. It's not an insurance that's insuring you as a customer. So anytime you can get rid of mortgage insurance, it's going to be a good thing. Now, does it always make sense to spend the money that you're going to spend to refinance to get rid of mortgage insurance? That's part of that math problem that we got to look at and just determine whether it does make sense or not. But yeah, it's always good to get rid of MI.
Okay. Laurence, let's go back and dive a little bit deeper into, you and I had a conversation the other day when we were talking about what really, the market is so hot. Real estate agents have the luxury right now, really kind of focusing and targeting on what I would call low-hanging fruit. People that are ready to buy, capable of buying, capable of getting financing, and they're ready to close in 30 to 60 days. But what we're also seeing is with the median price point of homes in the country being just a little above, I guess, around 200,000, I'm hearing a lot of agents saying that they're getting a lot of folks that are interested in purchasing and they've got 600 credit score. And so your advice to them is, what you said to me was, I want you to expand on it, is don't be thinking of those people in 30-day windows. They typically don't have cash to put down. You need to be nurturing them for 90 to 120 days and get their credit repaired. Will you talk a little bit about that? Because there's a lot of agents that are listening saying, I got 20 people right now that are wanting to buy a home, but they've got a 600 credit score. What do I do with them?
All right, great. Yeah, great question. So, back in the days, and I'm saying before coronavirus, we could take somebody with 600 and we could get them into a similar program, similar interest rate and down payment as somebody with a 640. But today, that's not the case at all. All lenders, if you got a client that's around 600, it's really tough to get them financing, period. And if you can get them financed, the interest rates are going to be astronomically higher than they would at, let's say, 640. So what we've done is we've shifted our focus to helping those clients get their scores up. So when we pull credit, we have this really cool tool. It's called a potential score improvement. And it'll tell us how many points each bureau can go up instantaneously just by doing something like paying off some credit cards or settling an old account, opening up a new credit card. So it actually tells us, this tool will tell us what's needed to do to get those points that it's the potential points that it's pointing out for us. So if we've got somebody that's, let's say, at a 590 middle score, and we can get their mid score over 640 just by doing a few things, that's going to make a lot more sense for those clients than trying to shove them or force them into a loan with a 600 or a 590 credit score. So we're taking the time. I'm educating my agents to do the same thing as well. Like, let's work together on this. Hey, they might not buy in 30 days. It might be 60 or 90 or even 120 days. But if we can get their scores up, we can work magic on what we're able to do, and the programs that can open up for them. The interest rates are going to be a lot better. It's going to save them, that client, so much money over the long run that it's well worth the wait.
Yeah, that's great. And Laurence, I want to switch gears a little bit and talk some about the relationship between mortgage lender and real estate agent. And I know that, you've been doing this a long time. You've got an incredibly stellar reputation in Central Florida. The agents that work with you would rather work with you in spite of your looks and your appearance, but they like you and they like the job that you do. So, talk from the mortgage lender's perspective to real estate agents. How important is it to have a close, tight, transparent relationship with your lender? And in order to be able to help customers better, what's the advice you give to because I hear a lot of real estate agents that quite frankly, they think of lenders as they're kind of dime a dozen, and they work with 15 of them, and it's sort of like whoever I can get to get the deal done is who I work with. What's your take on that, and how important is it to really have a deep relationship with them?
Yeah, so I mean, for those agents that do that, I would challenge them to go to the top producing agent in their office and ask them how important their relationship with their lender is and what kind of value they get from their lender. And I can assure you that most top producers have great relationships with maybe one or two or three lenders, and that's it. So it's a partnership, and that partnership is so important, not only to gain that triangle of trust with the client, but to make sure that we're all working on the same level of communication and the same system. The best realtors that I work with, Frankie, they all have great systems in place. And I know that that's, something that you guys specialize in, and you help a lot of your agents with their systems. But I can tell you, it's exactly the same. The way that they approach their business, the way that they treat their clients, it's a system. And it's so consistent, And that's exactly what we're looking for. We want every transaction to be exactly the same, and we want it to be a great transaction. We want to have raving fans that can't wait to brag about us. And we do a lot of co-branding with our agents. So I'll tell you, one of the things we just started doing, and my agents love it, is for a closing gift, we have a really nice cookie. We have a great company over here that we partnered with that makes cookie packages. And they send the packages to the client's work after the closing. So instead of at the closing table when everything's so crazy and hectic, we've got it sent to their place of employment. So they go to work after they've closed on their house, and they've got this beautiful gift bag of cookies waiting for them. And everybody's asking them where they got it from. Well, it's not only comes from us, it comes from the agent that referred that client to us. So
Yeah.
we co-brand that, and we continue to do that on every year anniversary that client owns that house. So every year they're going to receive this beautiful cookie gift basket from us and the agent that we partner with. So these are the kind of things that great partners will do for you. And that's why my agents love partnering up with us.
Well, that's a really great idea, especially getting the attention of other folks that are looking over the shoulder and wanting to dip their hand into the cookie bag. But you hit on something that's really important. Is as we look at what's going on with these folks with credit scores that may not be in the sweet spot, so to speak, is that system, is being able to nurture and being able to cultivate those customers, knowing which customers are ready to go now, knowing which customers you need to not forget about, because this is something really interesting that came up the other day. We had real estate agents that we were talking to that were telling us, hey, these people that aren't ready to go or their credit score's a little low, unfortunately, because the market's so hot, we don't really pay as much attention to those people. And guess what happens 90 to 120 days from now? Those people got their credit repaired. Maybe they got a little money for a down payment, but we lost the relationship with them and they got involved with somebody else and we lost the business. Mm-hmm. And so we've had a lot of agents that have really been pressing on, hey, I got to have a great system so I know who I'm ready to target now, who I'm focused on now, but I don't want to forget about these other people that are 90 to 120 days down the road. So, I appreciate you saying that. And I know it's an old thing, Laurence, when I was at realtor.com, there were studies about the top, what systems or technology the top agents in the country were using. And it was always a chicken or the egg conversation. It was, do the top producing agents in the country, are they top producing because they have systems? Or do they have systems because they're top producing agents? And I think the answer is probably both. It's probably both and so that's interesting. But now let's shift gears a little bit because the market shifted. Mm-hmm. Everybody's been talking about, are we going to see a little bit of a slowdown? Are we going to see a takeoff? Are prices going to spike? We were kind of hoping we weren't going to see a big price spike to create a bubble, but it sort of feels like that's happening right now. And so I would say this, and my question to you is, what is the role of the mortgage professional in the shifting market? What do you feel like is the most important thing for you to be doing right now, Laurence, as you partner with realtors and you partner with customers? What's your role? What is the most powerful, important thing, life-changing thing you can be focused on right now? And what should other real estate agents be demanding from their mortgage lender partners?
Well, I think education is the most important thing right now. Anytime you're in a shifting market, things are going to change. And, people get so emotionally involved in this transaction. And I don't think, those of us that have been in the business for a long time, we tend to forget this. This is a really emotional roller coaster for our clients. And I think we always need to be thinking about that and making sure that we're setting expectations properly. So whether it's losing a house because you got outbid by somebody, or whether it's being under contract and then all of a sudden the appraisal comes in way lower than what you were agreeing to pay for it and the deal falls through, there's always going to be something in this business that can keep a transaction from going through. And when the market starts to shift, we see this happening more and more often. So I think it's really important for us to make sure that we continue to educate our clients and educate our realtors and let them know as as we see these spikes in prices, I see the appraisals coming in. I know when the appraisals start to dip below what the sales prices are, and I want to get the word out to my agents. I want to let them know, hey, take that extra time to set prices right with your clients when you're listing a home. You know, don't let the tail wag the dog, right? Like tell your clients, look, this is the market and we need to price this house right to sell. So just the little things like that we try to educate, and that seems to really help in the long run.
Yeah, that's great. So Laurence, I'm going to hit another poll question about whether or not transactions are being held up, you know, for mortgage or financing issues. So Aaron, if you can pull up that poll question, I'd like to let the audience respond to that poll question. And while we're doing that, while folks are voting on that poll, Aaron, you had another question that came in. Go ahead and hit us with that question about Heloc loans.
Yeah, so Desiree popped in with another question, a really good one here. It says a lot of real estate investors take out a Heloc in order to invest in additional properties. Is there a strategy to do that so that it is financially effective for the investor? And how difficult is it to get a Heloc as an investor?
Ooh, that's a good question.
All right, so let's talk about HELOCs. HELOCs are a great tool for investors. In fact, they're a great tool for anybody. The key to the HELOC is, number one, you have to have really good credit scores, because this is a second mortgage lien, and these banks are going to be a lot more strict on credit scores and debt to income ratios than what we're able to do on a first mortgage. So my recommendation on the HELOCs is look around in your area. The banks that are or lending sources that are really strong with HELOCs tend to be credit unions and kind of your smaller local banks. So like in our area, Seacoast, Iberia Bank, McCoy Federal Credit Union, those are all great places to set up a home equity line of credit. They're gonna probably max out somewhere between 80 and 90% loan to value on your property. So your first mortgage can't be maxed out. You can't have an 80% or 90% first mortgage and expect to be able to get a HELOC. There's very few, if any, banks that will go all the way up to 100% loan to value on these home equity lines of credit. But the home equity lines of credit are adjustable. They are tied into prime. Prime right now is at 2.75. So a lot of the banks are offering them at prime or anywhere from prime to maybe prime +1, depending on your credit scores. So you're going to start off with an incredibly low interest rate on these home equity lines of credit, and the payments on them start off as an interest-only payment. So you're going to see some really good, incredibly low payments. It's a great vehicle if you're looking to invest in real estate, or maybe you have some credit card debt or something else that you're looking to pay off. I would definitely recommend looking into these HELOCs.
Yeah, that's you know, we're seeing over here on the beach, we're seeing a lot of people pulling HELOC loans and going out and buying additional, you know, vacation rental properties and things like that. So real estate agents, it's kind of a boon. You know, if you're in a market where there are a lot of vacation properties or second homes, really something to be talking about. And I think, Laurence, I mean, you know, how much time would you encourage real estate agents to say, hey, go do the research? If you're talking to a potential seller, go do the work, go figure out what kind of equity do they have in their property. Because if you go and say, hey, I don't know if you're aware of this, but you got this kind of equity, and we can get a HELOC loan, and you could go and buy these, you know, this property as a rental or an investment. I mean, it's a conversation starter to open things up. I mean, do you make recommendations like that to your customers?
Oh, absolutely. And you know, I'd rather rely on a real estate professional to give us the opinion of the value rather than them going to Zillow or you know, True Redfin or any of the websites where you can find property values. Of course, we all know those websites are designed to pull customers away from realtors and guide them into their own realtors. So I'm always looking to, you know, if I'm calling my past clients and we're talking about maybe refinancing, I'm going to have them reach back out to the real estate agent that referred them to us in the first place and say, hey, check with them, see how much your house is worth, And then, let's see if you've got some equity. Maybe it's time to start looking at investing into some second homes or some investment properties.
Yeah. So Laurence, we got a question that just came in, and going to ask you to pull out your crystal ball on this one. This is always the fun part. But Julie Hughes, thanks for the question, by the way, Julie. Julie Hughes asks, where is the jumbo market going?
Oh boy, the jumbo. That's a great question, Julie. So, jumbos was one of the biggest, hardest hit with COVID. And when I say that, the pricing got really bad. In fact, I priced a jumbo today, and you can still get really good rates, but not without paying some points. And of course, we know points are tied into the loan amount. So the more points you get on a bigger loan amount, it turns out to be a pretty hefty fee to end up with a good interest rate. So we know that it's going to come back. It's all based off of risk. All right. So lenders look at risk. And right now, honestly, lenders want to look at non-risky products. That's why the pricing is so good. That's the attraction to the good credit clients putting 20% down, or your FHA clients that have above a 640 or 660 score. This is where you're seeing the great pricing. But the products like jumbos, you're not quite seeing as good because there's just a bigger risk involved with them. So one of the things that we've been doing, though, is if we have a client that's looking at buying a house and they're somewhere, let's say, below maybe $800,000 or $900,000, well, they're probably already prepared to put 20% down. So what we're doing in a lot of cases is breaking their loan up into two loans. We're going to do a conventional first mortgage. We're going to take advantage of the great rates on the conventional program. And then we're going to couple it with a piggyback, a second mortgage or a Heloc that's going to make up the ground and get them to that 20% down. So we're seeing this creative financing coming back into the market, and I love it. And it ends up being a better, lower payments and a better product for the jumbo clients in most cases.
Wow, that's interesting to be able to do that. Yeah, I heard that term piggyback, and I didn't really know what it meant. Is that, are you seeing that happening quite a bit right now, Laurence? Or are you expecting an increase in those types of loans?
Well, I mean, I'm doing it quite a bit. I don't know if other loan officers are, but it just makes financial sense. And I think it's something that, yeah, we're starting to see more of it just because of the discrepancy in pricing right now. Back before coronavirus came, jumbo pricing was almost as good as conventional. So it didn't really make sense to do a loan like this. But now, I mean, you're looking at a lot of money that it's going to cost that client to have a good competitive rate that they would have doing conventional with no points. So yeah, we're starting to see some of the old tricks. We're pulling some of the old tricks out of the bag now again.
Yeah. And Laurence, are you seeing, with whether it's the pent-up demand, are you seeing anything, an impact in the market, from shifting with regard to approvals and closings? Are you seeing any of that being held up or slowed down, or you feel like your loans are still processing quickly and agents should have expectations?
Man, that is a great question, Frank. I mean, I'm very fortunate because our company has stayed very strong with hirings. Our volume is crazy this year. We're going to break all kinds of company records this year, no question about it. But we're still in a very good window. I mean, we're still closing transactions in 30 days. So if my agents call me today and say, hey, Laurence, how quickly can you close? I'm saying 30 days or less we can close. So not everybody can say that, though. I can tell you this, I've gotten a lot of deals in the last 30 to 60 days from banks that have literally taken, in some cases, months to work with clients, and they still haven't been able to close. I mean, it's a real problem, Frank. It's not just something I'm making up. I'm not saying this to sell. This is a real problem. There's a lot of banks, there's a lot of lenders out there that aren't returning phone calls. It's taken them a week to get back to clients. And I think it's really, really important today more than ever to make sure that your lender is purchase centric. Make sure that their focus is on purchase business and not the refinance business. Yeah, of course we're doing refinances, but I'm always going to keep my focus on my realtors and my clients and my purchase clients, because when these rates go up, the refinances are going to disappear. And I want to make sure that I've done a great job for my realtors through this whole crisis. I want to be here for them, help them. I know it's a tough time. I know realtors, for the first 3 months of coronavirus, were pretty much shut down. And now all of a sudden, you know, I'm seeing some of my realtors are like, they're hitting it harder than ever. Others, I think they've really truly been like emotionally affected by all this, and they're not quite back on their feet yet. They're still kind of like, oh man, this stinks, you know? And I want to be here for them, to support them, to show them. I'm telling you guys right now, get out there and make calls. I mean, there are so many people that want to buy right now. I mean, we got the whole entire spring buying season was wiped out from us. So we've got literally tens of thousands of buyers out there and sellers that are ready to get back into the market, and they're going to be looking for a great real estate professional right now.
You know, that's a great point too. In fact, Susan Fowler, she was just mentioning, not a question, but just a really great comment. She was mentioning that when you have a good relationship, you wouldn't believe the help that your lender gives you. And, you know, I wanted to mention, see, you said something, Laurence, that just caused me to think of another, you know, kind of a best practices, if you will. You mentioned about, you know, when I said, are deals getting held up or any of that stuff? Sometimes banks, they don't get back, whatever. But what advice would you give to a real estate agent right now to say, hey, if you want the transaction to move quickly, if you want it to go seamlessly, what is it you need? What is it that, and when I say what do you need, everybody has their checklist, okay? And realtors know what it is.
Mm-hmm.
But you also know from dealing with realtors every day, what is it that maybe they don't do quite as well or consistently as they should, that you know from a lender standpoint, boy, if that agent would be consistent and disciplined on these things, this would be a much more seamless process. What are those bullet points?
Well, number one, I would say work closely with your lending partner in making sure that the client is getting paperwork into us quickly. That is the number one hang up and hold up of closings, is clients not getting paperwork to us. So we can push, we can ask, we can, you know, hunt them down day in and day out. But a lot of times, if the realtors are on top of that with us, if we're teaming up on the client on that and saying, hey, we got to get this in or else closing is going to be postponed, that's the number one thing. Another thing I would say, Frankie, is with the home inspections. So I was talking to a home inspector yesterday, and they said that they are so busy, they're over a week out right now.
Wow.
And
wow.
a lot of
about that has a huge impact on the lending.
It really does. So, you know, I would make sure that you make your inspection period maybe a little longer than usual. I mean, I have realtors that are setting a 5-day inspection period, and man, unless you've got an inspector in your back pocket that's just working for you, it may be tough to find somebody to get an inspector out there in 5 days right now. I'd probably shoot for closer to 10 or 15 days on those inspection periods. Just little things like that we want to make sure we're keeping the train moving in a good direction. Work with a great title company. Make sure your title companies are you know, they're not overworked right now. They don't have too much on their plates, and that they can quickly get title searches done. So all those little things, I think, and of course, working with a lender that's got the capability of closing somebody in, let's say, 30 days is important as well.
Yeah, and Laurence, along that, because, you know, we're talking about hot markets, which is exciting. I mean, this is a much better thing to discuss, the challenges of a hot market where people are wanting to buy and sell versus the challenges of everybody sitting on their hands. So I want to talk a little bit about production, and let's jump ahead to a poll question here about agent production. I'm just curious with our audience, you know, what are they projecting? You know, you're projecting some continued activity, continued growth, but I'm just curious from our audience, what's your production looking like this year? You know, go ahead and fill out that poll with regard to what you think your production's going to look like. And Laurence, you know, like I said, you know, give us a little bit of a background mix on the types of agents you work with. I know you work with a lot of top producing agents, but are you also working with some newer agents that are like, you know, they seem to be showing promise? As a mortgage lender, what is it that you look for out of a real estate agent to say, that's the kind of person I want to partner with and make them better at their job?
Yeah, great question. So I love all agents. I love new agents. A lot of my best agents today were new agents when I met them. And it's so cool to watch that transition from being brand new and being green and not knowing anything to closing, 25 plus transactions a year. I think the most important thing is to work with somebody that's like you. They share your same values. They share your same morals and work ethics and same goals, and they're fun to be around. I actually fired my top agent recently, and it just got to where the relationship wasn't a great one, and we both kind of agreed we needed to take a break from each other and go in a different direction, and that's okay. It happens. I'd rather work with people that really appreciate each other and the work that we put into it. I can tell you this, realtors work their butts off, and you guys do an incredible job. And I know my agents are so busy right now, and so do we. We work really, really hard. I think having an appreciation of what we do is an important thing as well. So as soon as we get back to where we can, socialize again, we're gonna open up a realtor day where we're gonna have our agents come in and actually shadow us, maybe for a half a day or a couple hours, and just kind of see what we do. And I think that's going to help to that understanding of exactly what it takes to get somebody pre-approved, or what we have to do to get a file through underwriting, and all the other stuff in between that we do to make a deal work. And I think that appreciation on both sides is super important in that relationship as well.
Yeah, and Laurence, when you talk about the business, and we're gonna get into some Q&A here in just a minute, but what type of involvement do you get into as far as lead cultivation or lead generation or helping agents find more customers? Do you get involved in much of that, or are you fortunate to work with the kind of agents that don't really need your help with that?
Well, no, I love helping, and I do a lot with my agents. And you know what? We sit down and we look at what we feel is going to be the best thing that's going to help them. What's going to work the best? One thing I hate to see is for agents to waste money. And when you've been doing this as long as I have, you've seen everything. You've seen what works. You see what doesn't work. And so sometimes if I have an agent come up to me and say, hey, are you interested in this campaign? We're going to do this. If it's something I've done 5, 10, 20 times unsuccessfully, then I'm gonna explain that there might be some better options for them to spend that money on, or maybe we don't need to spend money. Some of the best business comes from stuff that's completely free. Whether it's picking up the phone and making phone calls, or whether it's maybe throwing a very inexpensive happy hour for our sphere of influence or our past clients. I think one of the biggest mistakes I see realtors make is they spend all this time and effort making a customer happy, and you got this great transaction, and then they're off and running to the next one, and they tend to forget about their past clients. Yeah. And you've got this gold mine sitting there that's just waiting, and if you're not there in front of them, I can promise you when it's time to buy, they're going to go somewhere else.
It's interesting that you say that. We get so much data, because we provide, IDX websites and lead gen and CRMs and middle of the funnel marketing and all that for agents. And, what's interesting is last year, in 2019, of our clients, 86% of the business generated by our customers was generated by somebody in their sphere of influence. Mm. And yet you hear a lot of agents that are out there chasing leads and, looking for that lowest hanging fruit. And I don't think they recognize that the vast majority of their business is going to come from staying in front of their spheres of influence and just reaching out and saying, reminding them that, hey, I'm in this business. Do you know anybody that's looking to buy or sell? And doing those kinds of things, because that's a big issue. We've got another poll question that I wanted to ask real quick, Laurence, because you work with lots of agents, and I hear agents all the time talking about lenders. Okay. And I've always said there seems to be like a love-hate relationship between lenders and real estate agents, and it's sort of a disposable relationship. Sometimes it feels like it's kind of a "what have you done for me lately" thing. The mortgage lender is wanting the top producing agent that's going to feed business to them. You know, the real estate agent is saying, "I don't care who you are or what you're like. If you can get deals closed, I'll work with you." You know, and so the question that I want to pose is really a simple one: is do you prefer, you know, the different question, Aaron, we're going to go to an earlier question, is are you currently just working with one lender or are you working with multiple lenders? You know, and that's something that I'm just curious about from our audience. And Laurence, when you work with real estate agents, do you find that most of them are working with you alone, or do they work with you because of a particular type of client they have, or do you feel like they're working with lots of lenders?
Yeah, most of the ones that I work with are primarily working with me. Now, they'll work with another lender if they know that it's a type of loan that maybe I'm not, you know, doing right now or that I don't specialize in. But what they do know is that if I don't do it, I'm going to refer somebody to them that I know is going to take good care of their clients. And that's important. You know, I'm a good resource. I've been doing this a long time. I know who does foreign nationals good. I know who does bank statement loan programs good. I know who does great equity lines. And those, you know, those are all products that I don't necessarily specialize in. So I think that it's important to find your primary lender and then have one or two backups. The one thing I would recommend, Frank, is to make sure that you're not referring all three at one time. Realtors, they're taught a lot of times that, hey, you got to refer three lenders. No, you don't. Show me where that's written. I want to see that rule. It's not true. However, it is good to have multiple lenders. And in the event that you refer a lender and the client doesn't have a great experience, you want to be able to let them know that you have other lenders that might be able to help them as well. So right. I think that's a better way. I can tell you from a mortgage professional standpoint, we appreciate that. We appreciate not having to butt heads with other great lenders in town on every single deal. It just makes our life a lot easier. It makes the client's life a lot better too, because it's simpler. Nobody wants to have to reach out to 3 or 4 lenders and you got, you know, all these different opinions and different rates, and some have points and some don't. Stay out of that part of it. That's my recommendation. Let your mortgage professional that you trust handle the financing. You help them with the real estate, and I can promise you that will lead to a better transaction.
Yeah, that's great. Yeah, that's good stuff. Look, man, we're almost reaching the end of another hour talking about things. So I'm gonna throw it back to Aaron and say, hey, Aaron, do you have we can take a couple of questions here and then wrap things up. You got any more questions that are sitting in there that might need Laurence's expertise?
We do. I have a question here from Sherry Romero. She's asking, I have a customer that owns a big lot. They paid cash for it and now would like to get some of that money out to purchase an investment property while they figure out what they want to build on that lot. I guess she's looking for some advice there.
Okay, so yeah, so lot loans are one of those specialty loans. You're probably looking at a bank, and I hate referring people to banks, but sometimes they're the only ones that can do the lot loans. As far as pulling equity out of a lot, I'm sure it's out there. I'm sure a bank, it's probably going to depend on the strength of that customer. I can tell you this, I would look at other sources first rather than the lot. If they own a house, maybe they've got some equity in there. Maybe a Heloc on their primary residence might be a better source for them to borrow that money rather than doing it on the lot. But I'm assuming banks can probably do that. It's not really my forte, but I know it's probably out there.
Yeah, gotcha. Yeah, very good. Like that. You got more, Aaron? If you got more, let them roll. This is Q&A time.
Oh yeah, Amy Powell is asking, what is the average turnaround time for a VA loan?
All right, good question. So VAs are going to run you about the same as a conventional or FHA, around 30 days. But the one factor that you got to think about on a VA is that the appraisal has to be done by a VA appraiser. and they have their own timelines. They can go as long as 10 days to get a report back to you, and that's 10 business days. So that's 2 full weeks. And some of these VA appraisers will grab the order and they're just really busy and they take their time. They could take all 2 weeks. And I can tell you, getting an appraisal back, taking 2 weeks is probably going to set you back. It's probably not going to close in 30 days. So as a rule of thumb, I'm recommending my realtors on the VAs to give us 45 days to get them closed.
Yeah, that's good. Are you seeing the same thing on FHA?
No, not really. FHAs, we can zip through them pretty good. The key is to have the client properly pre-approved. I mean, we get full sets of documents before they go anywhere close to signing a contract. So we know as soon as they get that contract signed, we plug that contract in and we're just pushing the button and sending it right on over to underwriting. That makes a big difference.
Yeah, and on Laurence, on that note, are you seeing a particular trend in any type of loan that you feel like is just for some reason it's popular, but yet it's got hangups?
USDA.
Okay.
I am doing a ton of USDA right now, and I love them. For those of you that might not be familiar, it's the rural loan product. It offers the clients 100% financing. And you have to buy a property in a USDA eligible area. So if you Google USDA eligibility, it'll pop the website up and you'll see a map of the US, and you can literally zoom into your area and start to see what areas are eligible and not eligible for USDA. It doesn't have to be a first-time home buyer, but they do have to have above a 640 credit score, and there are income limits on this product as well. So I can tell you, the sweet spot on this is going to be a sales price of, let's say, $300,000 or less, and the income limits in Central Florida for a family of 4 is going to be right around 80. I want to say it's about 83,000 now. I haven't looked at it in the last couple months, but I know it's right in that ballpark. And so that's going to be your sweet spot. If you can find clients in that 250, 280 range, this is a beautiful product, and we're doing a lot of those right now.
Yeah, that's good. Aaron, we got time for maybe 1 or 2 more questions if you've got them.
Let's see, I think that covers us for the questions that have been asked so far. So if anybody has one, they want to pop in there real quick.
Yeah,
I got a couple minutes.
I got a question here, and that Laurence said somebody was in Central Florida wanting to know how to get in touch with you. As they said, I'm over my lender. So I guess that's a good thing for you. But Laurence, we'll be sending out your information to everybody that attended. So if they've got any further questions, or if they just want to be able to get in touch with you. Also, Aaron, if you go to the next screen, I want to do that in just a minute. When Laurence, I'm going to give you a moment just to give your kind of parting words here. But if you are a real estate agent or a broker, through us at Elevate, we're actually offering absolutely free with no strings attached is an opportunity for us to do a social media consultation or an analysis. And if you'd like to, reach out to us, you can type into this chat window if you want. You can type in schedule me and type it in the chat window if you want. If you type schedule me, we'll have someone reach out, and what they'll do is spend about an hour just going through your marketing and your social media and find out what kind of tips and tricks and shortcuts we can give you so that you can be more effective. You can, leverage your spheres of influence a little bit better. I mean, that's what we do. We're the social media marketing experts in the country, and we are happy to provide that free analysis. And like I said, there's no strings attached. No one's doing it to try to, trick you into a sales presentation. We've got solutions available to agents that need them, but we want to help real estate agents just be better at what they do. So there's a couple of pieces of contact information there. Laurence, we got a minute left, man, and I just wanted to, a parting word or two for the realtors that are on here, and what you can recommend and inspire them as we come out of these COVID, period of time, and what to look forward to.
Yeah, thanks, Frank. It's always great to see you too, buddy. I'm so excited to be able to do these with you. I hope we can keep these going. I hope it, I know it's helping some folks out there. Get
Hey,
out right now.
as long as I continue to look younger than you, we'll keep doing these.
Yeah, you keep telling yourself that, Frank. So my advice right now is get out there and make calls, talk to people. You know, we're all about the safety. We all want to be safe in this environment right now, and I get that, but there's so much business. You just got to get out and you got to contact people and reach out. People want to buy, and no virus is going to stop that. And we need to be there for them. They're looking for real estate professionals right now. People are so hungry. Put a post on your Facebook. Just let people know how incredibly low interest rates are and what a great time it is to buy. And I think just something that simple could drive some business your way.
Yeah, that's great. Laurence, thanks again, man. Really appreciate it. Just a wealth of knowledge. You weren't nearly this smart in high school. And but I really appreciate you giving this time to our mutual audience and to the real estate agents that took time out of their day to join us. Really appreciate that. Really have a lot of respect for you for doing that and trying to learn and get better at what you do. If we can help you in any way, please feel free to reach out to us. We'll make sure that you have Laurence's information. If you're a realtor in the state of Florida and you need a good lender, Laurence is there and his team, an awesome team. We've done a lot of work with them. And look for us for the social media boot camps coming to your area pretty soon. And with that, we'll wrap it up and say thank you, everybody. Have a great day and a great weekend, and keep selling.
All right. Thanks, Frank.